Hello everyone, Morrison. Welcome to Tanks Invest. Talk about investing, finance, and fresh development. For today's video items only, the investment topic today will be Ethereum taking ETH. With respect to Ethereum, as I'm recording off of 5:52 p.m. on Eastern Time, currently $2,813, up about 3.75% so far. With respect to the surge that we experienced today, ever since the dip that we had in the morning, we were hitting all the way down to the $2,529, and then subsequently with the two bull surge driven by whales and obviously with a lot of FOMO effect on top of the mixture of a lot of positive media affectation that was mixed into the mixture. We subsequently surged up all the way to the one time and today's high $2,844. Right, it seems like we're kind of normalizing trading on a sideways fashion, kind of consolidating right now. We are above the $2,750 level, which is a relatively good sign, knowing the fact that there's a new platform, a new cushion that we're currently forming, right? The first cushion that we've had formed historically was 2,150, and subsequent to that, we had the 2,450, and now we are at the 2,750, expecting to leap up to the $3,000 mark, obviously as a flat number, but obviously with respect to the substantive level that we identified in the technical analysis so far, is the 3,150 that we should be expecting as the next level of substantiveness, right? So with respect to the tomorrow, we should be experiencing a little bit more volatility because number one is the weekend affectation. Number two is the expiry of options that's expected to happen tomorrow, right? So with respect to option expiry for Ethereum, it's total about like $357 million. And with respect to the ratio that we're experiencing so far, based on the high level perspective that I've been reading on the chart so far, on initial view, it shows a reasonable balance situation between the call to put ratio. It stands about like 1.15 right now, which obviously if you look at that spectrum, is slightly favored to more of a neutral to bullish call options by about like 15%, obviously 1.15. And this indicator reflects the, in total, and I counted about 70,956 call options that are equivalent to about 191 million open interest, and is stacked against 61,632 put options, which reflect about 166 million in total interest. With respect to the call to put option, it seems like it's kind of relatively balanced, but we do not have visibility into how people are shifting the contracts, right? Or are they making any adjustments by pushing the time out? Or with respect to the strike price, how they are shifting as well, right? So that's an unknown factor, on top of the fact that we do know that the weekend affectation should be coming, and the media affectation, and how the volatility reflects based on the option expiry tomorrow. So we do have a lot of unknown factors that's in place right now, that's up in the air. But that's why we need to do a technical analysis to structuralize our frames of references, right? The resistance level that we need to identify. So we are performing calculated decisions, when we execute at the dollar cost average levels, right? So I'm going to go through that specifically into how that would reflect if we are going to go surge up tomorrow, what level and how likely are we going to get up to 3,150? And if we go down tomorrow because of the weekend affectation or negative news, or because of the option expiry goes in that favor, how likely are we going to go down to 2,750 or even close to 2,450 again? So stay tuned, stick around, let's make some money. Moving on to the technical analysis for Ethereum taking ETH, I'm recording as of 6:02 p.m. on Eastern Time, currently $2,828, up about 4.31% so far. With respect to the surge that we're experiencing today, it seems like we attempted to break through the 2,850, which if you take a look, that's a non-substantive type of consolidation zone that were formed in the past. You could see these mini candles that we've had before. We technically had like two consolidation zones. One's here that we formed on the 26th of May, and then another one on the 21st, right? But beside that, we never really formed anything about the 2,850, and that's why we kind of canceled out and hovered back down, right? Because technically the next leap up is really the 3,000, which is the flat number. But again, a flat number is not a substantive consolidation zone. The real one is actually up here, right, with the escalator that you see on a down step on the 3,150 and the up step, the 3,150. So they match, right? So technically, if you want to sustain the bullish momentum to the next comfort zone, is the 3,150, right? But ultimately, we have a high propensity to go to the closest comfort zone based on the supply and demand dynamics that we have, right? So we see that MACD right now, we're relatively crossed up. So we've been basically surging for the last 2 weeks so far. Also on the RSIs, we overbought right now, despite the positive affectation that we've endured so far, right? The technicals is screaming overbought in all levels right now, right? And today with the fishy activity, with the, two subsequent bull pump that we had from, basically driven by whales, and till this day, we do not know the entity of those two whales, right? So we need to verify and do some investigations on who's doing that, right? Because those are relatively large purchases to pump from 2,529 all the way to basically 2,800, right? That's the $300 pump in a blink of like an hour, not even an hour, like 30 minutes, right? We saw that mega green candle just like jumped up once, right? And it durate from, I believe, 9:30 a.m. all the way to 10:10 a.m. on the Eastern time, right? So tomorrow expiry and also the weekend affectation and also the Black Swan news that we do not or have the visibility to foresee, these are all the unknown factors that we have to prepare ourselves for. And we are not wizards and we do not gamble based on how we predict what news is going to come out tomorrow, what price level we're going to go tomorrow. We can never time it. It's not possible. It's impossibility. We can never like keep track of what publishing company is going to be publish what type of articles, which whales are manipulating which publication companies to be pumping what articles. Is it going to be a bearish article today or is it going to be a bullish article today? We can never predict that. That's impossibility, right? Unless you know everything and you are completely wired into all access of publication companies. But that's impossibility again, right? So we are ultimately in the business of risk mitigations, and the level to risk mitigate is that knowing the fact that the next level of comfort zone is the 3,150, on top of the fact that the technical is screaming overbought right now, that the true comfort level is truly the 2,750, which is, I would say is a more of a secondary comfort zone level that we're forming. It is a good thing that we're forming and providing us some substance right now because historically, we need to build more ground at the higher levels before we can further build up a building, right? That's just the way how architecture works and how basic supply and demand dynamics works as well, right? You don't just shoot up right away without consolidating or taking a breather, right? That applies to human, that applies to basic physics, that applies to obviously financial dynamics, right? So I think the next level that we'll ideally go back to with 2,750, right? And knowing the fact that we've dragged up so much already, I think the normal course of cadence should be potentially hovering back down to 2,450, right? And that's just how the technical is telling me, right? But again, we do not know how the news is gonna be manipulating going forward. We could potentially keep surging up, right? And I hope we get to 3,150, but by that point, history will basically be repeating itself, right? And the last thing I want you to do is to get caught in the trap, right? And I heard some of the people in the comment section today already, they basically saying like, oh no, I bought at the $2,750 level and I see it's kind of dipping right now, going back down. I think if you bought in today or you felt like in your guts that today was the right methodology, then that's totally good, right? Just hold and do not sell based on emotions, right? Because whatever is done is done. You have already bought it. You just have to believe in the long-term value proposition going forward, right? You have to believe that the price will surge going forward, and based on how the dynamics looks like, it should be, right? But I do foresee a correction coming before the next rally coming up, right? That's just how it's supposed to be, right? It needs to cool off a little bit before the next surge, right? We cannot just keep pumping up like that, Even a rocket needs to cool down a little bit before it continues to surge, right? Or you're gonna blow up the engine or something like that. You don't ever just like push it so hard that it doesn't come down, right? So this is, frankly, a little bit abnormal, right? And when you see these type of abnormality and also with the whale that manipulated the market dynamics today like this, you should be really raising your spidey sense exponentially higher than ever and not chase the pump, right? Again, FOMO is an emotion that's not logical, right? And control your sanity, control your emotions, look at the charts, do your research before you execute any price level so you don't lose money from there. All right, just to recap on numbers and technical analysis, again, right, the ideal comfort zone that we should be coming down to is either going to be 3,150 or 2,750, right? And based on how the chart is set up right now, I would say the likelihood of actually going back down to 2,750 should be higher, right? And the ideal level, knowing the fact that the more substantive level in comparisons to 2,750, which I call that secondary level, should be 2,450, right? And for me, knowing the fact that I do have a relatively sizable position already, and the technical is screaming all overbought and all level, I would not be chasing the pump. I would be waiting patiently, wait for the next opportunity to dollar cost average. And I think 2,450 should be in horizon based on the logics of the supply right now, right? And I think once we get there, we should be continue to surge up from there and continue the bull rally that we've been enduring, right? Do we see 2,250, 2,150? I think, that's basically breaking like 5 resistance levels. I don't think that will be likely. But if we do, because of, remember, we have been surging consecutive for 2 weeks now. I wouldn't be surprised if we hear any like consecutive negative news coming up, right? Because we're probably gonna see, the whales, they did what there's a reason why they did what they did today, right? They bought in, they pump, and they try to basically lure the public investors to go in to search the ideal level, right? And then they dump, harshly, without human remorse, if you may, right? And the last thing I want people to do is to be on that side of the coin, right? So that's why practice patience is always the good way to, take it more of a risk averse way in investing. It's always a good feeling to know that, man, I wish I bought more, because it means you're doing it right. All right, so that's it for there. Respect my technical analysis on Ethereum ticket ETH again. So hopefully this is helpful. Tomorrow could be a volatile day, so definitely be prepared. Again, use the logics, use the frames of reference that we've identified so far to execute your trades, and do not chase, and use, basically minimize your emotions, if you may, when you execute your price level. And yeah, again, feel free to give me a shout if you have any questions. Again, I'm always trying to be helpful. And stay tuned for this coming up. Take care. Bye.